We all know that real estate has created more millionaires than any other industry on the planet. We also know that it has created a lot of heartache due to mismanagement, overborrowing, and just simple life events that happen to all of us. Welcome to the Cash Flow Pro podcast. My name is Casey Brown, and I am your fearless leader. And although we might be bourbon sipping and at times foul-mouthed Southerners, we will always do our best to be honest, straightforward, and due diligent with all of the information we pass along to you. Welcome to the show. Hey there, and welcome to today's episode of Cash Flow Pro, your daily real estate investing podcast and YouTube channel. I'm here today with Rob Beardsley. Rob, how are you?
I'm doing great. Thanks for having me.
Absolutely, man. It's Lone Star Capital, right?
That's right.
Awesome. I know you were just talking about this Houston deal that you got and that you all are actively raising for, and we can't wait to dig into that. But first of all, why don't you tell us just a little bit about yourself, where you come from, your history, and then how you angled into the real estate business to begin with?
Sure. So my business partner and I, we started Lone Star Capital 4.5 years ago to focus on owning and operating Texas workforce housing. To date, we've acquired over $300 million in assets, primarily in Houston. And last year, we actually launched our property management company, Radiance Living. So we are now vertically integrated, and our management team only manages our portfolio. So we don't do any third-party management. Keeps us really focused and focused on optimizing the portfolio for us and our investors. Before starting Lone Star, I had real estate experience through my family. Growing up, my family ran a residential brokerage firm in Silicon Valley from home. So I was around doing, hearing them do deals all day long.
Sure.
But everything was on the single family side. So it was, buying and selling homes, development and the construction of single family homes. So it wasn't until about 6-ish years ago that we got involved in multifamily as kind of that next step. And I led the way on that step. And unfortunately, at the time, my family was too busy with the main residential business to really go full into multifamily. And so that's when I had the good fortune of meeting my business partner and starting Lone Star on our own, which has been a really awesome journey so far.
Sure. Well, that's great, man. And you said 300 million assets under management. I mean, that's unreal. That's and how many years did you say? What year did you say you all first started?
Early 2018, so about 4.5.
So yeah, that's what I mean. I was thinking that's a pretty hefty load for a little more than 4 years. So that's great, man. Now, are you all mainly focused in the Houston market? Obviously, with the term Lone Star, maybe I'm assuming maybe you all are probably at least focused in Texas, but are you mostly in Houston?
Yeah, we're definitely Houston focused with the plans to expand to Dallas, Fort Worth, but focus has always been a key for us. Focus for the sourcing on the acquisition side, right? Chasing deals in a smaller area lets us be more competitive, lets us know better as to what we're underwriting, and also have better relationships with the brokers and owners in the area. So focus has been really key for our success.
Sure. Now, what do you, we usually focus more on the beginnings of real estate companies and how people got started and so on. But one question that always seems to come up, so we're going to move more towards your experience side. But the question that always seems to come up from investors is about this vertically integrated property management stuff. And at first, I thought from a investor relations standpoint, it was a little bit of a nightmare because I guess people look at it as, hey, these people are, they're being compensated or whatever for services they're providing to their own investors and so on. But it actually became easier to discuss when I finally came across the idea that, hey, once these vertically integrated companies take the rent in, the money basically doesn't change hands again until it goes out to the investor. So it's really from a standpoint of being able to control everything, it seems like it's a pretty good move. But what do you think? Obviously, you all did it, so you thought it was a good move. But what were some of the biggest challenges in taking that part of it on?
The biggest challenges are scale and then team, right? Property management is all a people's business, and it's very management intensive. So, the
Yeah,
first thing on the scale side is you can't build a management company out of 200 units. You need to
yeah,
have more scale to be able to actually afford the corporate overhead of having regional managers and more overhead staff.
sure.
And we waited a long time to get to that point, but we prepared for that point by kind of figuring out little things along the way, how we wanted to manage payroll and accounting and HR. And we also were putting the team together along the way. We were putting together, who do we want to be our regional manager, VP of operations? How do we see that building out? So we were really fortunate to have the right team come together so that the transition, which can be a hard part, the
Sure.
transition was very smooth for us. And then the other thing is I don't think people really talk about this as much, but I don't think you want to be too big, because
Yeah.
once you get so big, making the transition could be a total nightmare. Going to taking 10,000 units all in house at once, transitioning all
Yeah.
those properties, that could be really tough. So I think we transitioned right at the right time. It was way before the property management business would be profitable. The property management business is still not profitable today because we run it that way to really make sure that we're investing into the properties rather than trying to suck profits out of the management side, right? The management side
Sure.
is not what we're in the business for. So, I think getting involved, getting it moving early is really helpful.
Yeah, and of course, there's always the people that I know of that are in the property management business slash capital raising business slash real estate investing business, all of across that board. It seems to me like the term of the day is disclosure. Like it's almost like, hey, if you just tell people, it would almost like if people just found out later that you were managing the properties that you're having them invest in. It seems like that would be where it wouldn't be cool. But as long as you're just up front, and you're like, hey, we got a property management company. This is the reasons why we have a property management company. I mean, I've found that people really just tend to kind of go along with that and say, oh, they're like, oh, okay, yeah, well, that makes sense. Otherwise, they tend to start questioning those kinds of things. But so on the outside capital part of your all's business, where you go, for instance, let's talk about this past deal. And you were talking about doing a webinar and some other things that you all have going on for that specific deal. Can you walk us a little bit through, like, maybe where you find investors? How do you attract new investors? And obviously you have an investor base, people that repeat, but where do you find the new ones?
I think our biggest sources of new investors are LinkedIn, podcasts, just like this one,
Sure.
and my book that I published a little over 2 years ago, The Definitive Guide to Underwriting Multifamily Acquisitions. And that one's kind of a funny
Yep.
one because you wouldn't really think that passive investors would buy that book because it's very niche and somewhat advanced. But surprisingly, a lot of investors buy that book and then they reach out and are interested in learning more about investing with us. So that's really great to
Well,
see.
the book proves two things. The book proves you know what you're talking about, because you wrote a book about it. And then the other part of it is the book proves that this is the model that you use. And so once you've kind of doubled down on that, of course they're going to be like, hey, yeah, this guy knows what he's talking about. And hey, by the way, this is a really extensive, underwriting a property is something that's very extensive, very time consuming. And hey, I'll just invest with him and let him take care of all of that. Right.
Yeah, that's a good point. Yeah, so that's been very successful, and we've been posting on LinkedIn daily for I don't know how long. So been growing the LinkedIn audience and trying to provide quality content, hopefully unique quality content that people
What
aren't.
types of content are you providing on LinkedIn?
So I really like making content that is relevant to me and something that I would personally be interested in. So anything that comes up in our business that is maybe a new trend, lenders are changing their underwriting or debt, has changed. I like to talk about that kind of stuff and
Yeah,
get more advanced and talk about different nuances and partnership structures. So it's really not like the joke I like to say is, I don't like to make content about what is a cap rate. Certainly that can be helpful for a lot of people, but that's not the content I'm passionate about making. So
sure.
yeah.
It has to be relevant to today too. I've found that to be a big thing, especially well, really across all social medias. It's like you're like, what is a cap rate? A cap rate is when you take and that can be kind of basically just dry and not very interesting. But when you start relating it to what is the topic of discussion of the day, or what is today's lending, like you said, I mean, I think that's great, man. That's And then do you lead people from LinkedIn? Do you just like leave teasers about, hey, check out this new deal? Or you leave a video that says, man, we've got this bad in a good way. We've got this awesome 182 unit deal coming up in Houston. Man, you've got to be on here for the webinar to check this out. I mean, is that the kind of stuff that you do to eventually lead that audience to your webinar?
No, but it sounded really good when you did it. So
Awesome. Yeah.
maybe,
Hire me.
yeah, maybe we
I'm
need your
free
help.
tomorrow. Yeah.
But we don't. I mean, so we've actually only done 506B offerings, so that
Okay.
limits us to not
That
being able to
changes it. Yeah.
publicly talk about. It will publicly solicit investors as for a specific deal. We
Sure.
can obviously tell people, hey, if you're interested in learning more about investing with us, you can. So we've been really passive about our sales strategy, if you were, and I don't. And I think, honestly, I think that's a bad thing. I think we can improve that a lot. We certainly on LinkedIn say, hey, if you're interested, here's our website. You can fill out the new investor form. We'll get in touch with you. But we've been up to this point very passive about the sales process and the growth, which is kind of matching my personality. I've never been a really, good salesperson. So that needs to change. We need to fix that, and we need to do that because I think we've got a lot of people who are interested in what we're up to, and we're just not doing a great job of following up and really making sure that people are getting fully exposed to what we're up to.
Sure. Sure. So basically your webinar invites are pretty much to that procured list of people that you have a previous relationship with then.
Yep.
Man, that's insane. I mean, you just don't hear a lot of people. Most of the time, 506B people are like, it's tough it's really hard to scale, I guess. Or you don't see a lot of people scaling it because, I mean, obviously, what do they say? A person can have 600 to 800 immediate contacts is basically, that's like, I know that number kind of has gone up and down as social media has come up and down, but that's what I've always heard. So it almost like that limits you. But man, that's awesome that you all are well, and it's good that you've got enough people in there that have enough money to facilitate what you want to do within a 506B. So well, what else is going on with Lone Star? I mean, you all have obviously, you said this new asset is right across the street or next door to one you previously closed on.
Yeah, that's right. So we're under contract on a couple deals right now. The one we were talking about before we went live is our newest deal, and it's right next door to a deal we closed a month ago. So it's just a great add-on acquisition. Makes a ton of sense. We'll be able to trim down payroll and just manage the deals
Sure.
together more efficiently. So finding opportunities like that with a good story where it's a long-term owner and the units haven't been touched in years really is perfect for our strategy of value add.
Gotcha. Gotcha. Well, that's awesome. And so are you all looking at potentially expanding out of the Houston market, or are you, because you said focus is a big pillar of your business, and it's obvious that you all are, but do you see yourself kind of growing out of that market or trying to diversify a little bit?
Yeah, we definitely need to on multiple fronts. Firstly, I think it's good to diversify our portfolio and to grow. And if we want to grow and actually get more acquisitions done, I think being in more markets, so long as we have the manpower and expertise to do that, then it's the right move. And so we absolutely want to expand into Dallas Fort Worth as our next market where we'll do the same focus that we've had and build up the team there locally as well. And the other
Mm-hmm.
reason to expand is for our investors' sake. there's plenty of investors out there that really love us and they want to work with us, or they want to work more with us,
Mm-hmm.
but they're limited by not wanting to get too concentrated in a certain market. And, that expanding that will just be able to eventually, raise more capital from our existing investors and potentially attract new investors that are interested in our new market. So I think that'll be a really big move for us moving forward.
Yeah. Yeah. What do you see as being the biggest challenges coming up? This recording as of mid-August 2022. What do you see as being the biggest challenges for the real estate syndication business moving forward?
Well, right now, the debt market is very challenging and it's hard to find good debt quotes. And it's not the lender's fault completely. There's just lots of things changing every day in the economy and in the capital markets. So that uncertainty puts a strain on everybody. Rate cap prices are strained, lenders are strained because the environment's changing. And then that makes us going out and raising equity harder as well. So I think transactability right now and for probably the next 6 months is going to be more difficult. And
Sure.
that will get alleviated over time as I think prices will come down slightly. Sellers will get more realistic and willing to sell at slightly lower prices, which will relieve some of the pressure as far as trying to make the deal pencil between debt and equity. And then at the same time, volatility and uncertainty are going to definitely go down over time as well. And then that will help restore the debt markets. Debt will get competitive, and we'll, I'm sure we'll get back to business as usual soon enough.
Sure. Yeah. And where are you sourcing? Obviously, I know I have a pretty good idea where the next door deal came from. It probably came from simply just picking up the phone and calling the people next door and saying, "Hey, we just closed on this one. Would you do this one?" But do you all have? Obviously, you have broker relationships, but being that you're centralized, or being as that you're focused in one market, how many brokers do you all work with in that one market?
So, I mean, every market is different. So some markets are controlled by just a small number of brokers, and you just really have to get strong relationships with those. And then other markets are more spread, the sales are spread out amongst a bigger group. So I think whatever market you're in, it's important to just really cover the brokers that are doing business. So for Houston, in our market, I'm trying to think off the top of my head, there's probably somewhere around 8 groups or so that are doing the vast majority of the business, and we have to be in touch with all of them frequently. So that's if it's 3 or 8 or 20, that's just, we have to cover the market, and that's important to us because we want to be able to source as much of the relevant deal flow to us as possible, so we can underwrite everything. It doesn't mean we have to buy everything, but the more we underwrite, the better we can. The better the deals we can do, right? We can pick that top 1% of deals and making sure that we're really structuring the best deals for our investors.
Now, Houston is either growing or consolidating as far as living situations go, because it just seems like, man, every group, every investor group right now is like they're focused on Houston, Austin, Dallas. What is contributing to such vast growth? I mean, I know that Tesla moved their headquarters to Austin, right? But what is really fueling the growth of Houston? Because Houston has traditionally been a market that was just kind of yay or nay. It never was just a full in, on fire, let's roll type of a market. What's fueling that?
Yeah, it's a good point. And there's been strong trends across Texas for that growth, as far as the population growth, the migration, the job growth, the corporate relocations, kind of like you mentioned with Tesla. So all that's happening every day. And also real estate specifically, you have not exactly real estate specifically, but you have a no state income tax, and all the states without an income tax are winners right now, and they have been for a while.
Yeah.
And then specific to real estate, it's a very landlord friendly state, which also contributes to the demand from the investor side to be in Texas. And then Houston, I think, is interesting because it's historically been not the favorite market by institutional investors, because institutional investors have historically been worried about the boom bust nature of Houston with its dependence on energy and also the weather risk with hurricanes and flooding. So those are real concerns and real risks, and that has prevented or kept away many investors, which has then made it a less competitive market where you can buy better deals, so long as you know what you're doing and you buy right and you manage well. But I think kind of people are getting more comfortable with Houston, particularly on the energy front. I think people are recognizing that Houston has diversified its employment base, and
Sure.
it remains to be tested more thoroughly, but I think it is a more resilient market and is no longer really a boom bust market like it was before. So I think that's helping a lot of people invest. And then now you're seeing that rush and people want to invest.
Yeah. Yeah. And then of course you always had I always attribute, like, I was kind of said Houston was like the California of Texas, where you either invested in Houston or you invested everywhere else, but you didn't do both because the laws and the rules were so specific there that, man, you could get caught with your pants down on a deal where you go in and you think it's just a killer deal, where everybody is standing around. The people that are there are, they're like, well, he's fixing to get burned or something. You know what I'm saying? And so that was always kind of the feeling that I got anytime you talk about the Houston market in big circles or whatever. So, so what's on the horizon for you all coming up? I mean, you've got this, how many deals did you say you have under contract?
We have 3 with one closing in about a week or 2.
Gotcha. Awesome, man. And and then you've got the 2 others, and of course everything's right. Now, as far as, you're adding all of that right to your property, like you take over property management immediately and then push it right into your deal, right? And did you find it hard to find I think you all structured the property management company like you have a president and VPs and so on and so forth. Did you find it hard to fill those positions with with good qualified people that had the real estate experience to take care of it? Because property management, man, can be awful. I mean, not fun and not like property management is not for the faint of heart.
No, definitely not. You need the experience. You need the local experience as well. Yeah, building the team is really challenging. Like I said before, we were really fortunate to have some of that team built in. So we were able to hit the ground running, and that's been really, really solid for us so far. And right now we're in the process of actually building out our construction side of the business. So we're bringing construction in-house, and that is going to be really great once we get that going. But like you're kind of alluding to, hiring for this is proving to be challenging. And I think everyone's experiencing that across different industries. And so we're just staying patient. And I think it's really important to get the hiring right. It's really important.
Hi, this is Casey Brown, host of the Cash Flow Pro podcast and YouTube channel. Have you been thinking about investing in real estate but just don't know where to begin? I'd like to help by inviting you to check out our website at www.3000capital.com. There you will find an array of material that will help you learn all about real estate syndication. And while you're there, be sure to check out our free video series download titled 5 Must-Know Keys to Success in Passive Real Estate Investing. I'd also like to personally thank you for making Cash Flow Pro part of your day. Now, back to the show.
Sure. Yeah. So you're going to have a separate construction arm, separate property management arm, and a separate, I guess, ownership, capital raising, syndicating, whatever.
Right.
Arm,
yep.
Right. Man, that's awesome. And all of that in just a few years, as far as this thing, I mean, it's really exploded in growth. And of course, I always point out try to be the devil's advocate a little bit especially on the Houston market, just because we hear so many rumors about it and we've never had an asset there. So it's all secondhand information, but yeah, the construction part of that is pretty interesting. Are you all built? Have you built anything
No,
yet?
we haven't done any development. And on the construction side for us, it's going to be for our value add business plan. So when we buy a property and we have a $2 million or $3 million budget, we'll be able to in-house more of that process as far as the unit renovations, painting, and things like that.
Gotcha. Now, as far as key principles go, what did you have to do to find people that were willing to be KPs on your deal to take care of the balance sheet and whatever else that you needed?
Yeah,
there?
that's another really important piece of the puzzle when you're getting started. And it was something that we didn't really think about or prepare for well. So it came to us, and this is the worst thing that you don't want to do is you don't want to get caught off guard and be in a rush while you're already under contract to put your team together and find a KP to co-sign the loan with you.
Yep.
So that's exactly what we did. And, it was a pretty bumpy ride, but when you have necessity, right, you just make it happen. So fortunately we did make it happen. And then we got better along the way, got new and improved relationships along the way. And then before you know it, got enough experience to where we're able to, for the most part, sign our own loans without KPs.
Sure. Yeah. And that's obviously the goal for, I think, just about everybody, is to get to be that balance sheet person. It kind of takes a whole, like it looks to me or sounds to me like you all are being very efficient and very poignant about removing elements that require other people or other businesses, because the more influence those outside things have on your business, the harder it is for you to have the element of control across the whole
right
thing.
Yeah, I think bringing it in-house is really important. And it's interesting, going back to the conversation we were having earlier where you're saying how some investors may not understand it, and the more sophisticated investors, institutional investors, they really look to sponsors having their own in-house operations because they see that as a higher perceived value. They feel like they're partnering with someone who's more hands-on, going to be more transparent, have more control over the operations. So a lot of family offices and private equity firms, they're really looking for a partner like us that's vertically integrated.
Yeah. Yeah. And then, that's another really good point. The family offices, which when I talk about family offices, I'm talking about like big trust fund people who are overseeing maybe either one person or one family's money, and they're to distribute it amongst vetted deals and so on and so forth. So when I start talking about that, but those people want vertical integration, like that is, I didn't realize that was a requirement really of most family offices, that you be vertically integrated.
Yeah, exactly. And we learned that early on, and we set out as a goal to make it happen.
Yeah. And I guess it all comes down to, because, how many times have you seen or heard so-and-so's working the cash register, and well, they slip $100 here or there or whatever. And it's, of course, $100 in some of these deals isn't an enormous amount of money, but if it happens several thousand times, obviously then it becomes a problem. But what I'm getting at is they want control of it. From the second that money leaves the tenant's hands, it's in control of the same place, really, until it lands in their bank account. It's all streamlined. They know it's efficient. Then I'm sure there's reporting rules, or, they're like, hey, we want to see reports on this, this, and this to see how things are going. And they can really control it from A to B or A to Z, really. So, well, listen, Rob, I want to thank you for taking the time to be with us today. And we ask a couple of questions of everybody that comes on everybody that comes on as a guest on the show. And the first of those questions is, what is the best book that you've recently read or are currently reading?
The best book that I've recently read. I recently read High Output Management by Andrew Grove, the CEO of Intel. That's probably one of the best management books I've read. And I really like management books. I'm trying to learn more about growing a business and stuff like that. So that book is a very quick and easy read, but it's really profound and fairly actionable. So I need to reread that.
Sure. Yeah. Well, that's great. Yeah. Especially a lot of the systems and stuff that you all have. Management is a pretty damn important part of everything you got going on. So awesome. But what is what is a dream vacation that you've either taken or hope to take?
Well, for a long time, I've wanted to go to Bali, but it's just so far, and it's almost not worth it to go that far. So we'll see. I'll probably make it out there, but if I would do it, then I have to go for a month, because you can't spend a full day on a plane and not be there for a while.
Well, and if you're going, I've always said going west, it's like petting a dog the opposite way. I mean, it's just, there's nothing easy about it. Even if you go from where we are in Kentucky or where you are to Vegas, I mean, it's just like a whole different world. But you're exactly right.
Yeah.
Are you there? I'm sorry, that looked like it froze up there for a second. So, all right. Well, listen, if somebody heard something that resonated with them, or they want to reach out and get in touch with you, what is the best way for
The best way to reach out is to go to our website, lscre.com. On our website, we've got tons of resources, from a free passive investor guide to our underwriting model download, as well as, ways to get in touch with us to learn more about investing with us, or just, get in touch to learn more.
Awesome. Rob, thanks again for taking the time to be with us. And listeners, as always, please head down and leave us a review. Leave us a 5-star review. And that way other listeners can see and know what we talk about here on the Cashflow Pro. And while you're there, please hit the subscribe button so that you can be notified as we release new content and new episodes. You don't want to miss what we have coming up. I can assure you, you will learn something. And again, Rob, thank you so much for your time today. And listeners, thank you for your time. I hope everybody has a wonderful rest of the day.
Cashflow Pro is hosted by Casey Brown, founder and CEO of 3000 Capital, a commercial real estate investment firm committed to providing its investors with ongoing cash flow and helping them build long-term wealth. If you enjoyed today's podcast, make sure to hit that subscribe button so you'll be notified about all our future episodes. You can find more information about us and our investment philosophy by clicking the link in the show notes below. Thanks for listening.